Good evening, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. Now keep in mind, all of the options in today's video are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. I like to run this strategy with 80% of my capital every single week for 3 very simple reasons. Number 1, it's a very easy to manage and scalable strategy. Depending on your account size, you can either scale these trades up or down per your requirements. Reason number 2 that I love this strategy is because it's a very low time management strategy, a very passive strategy of some sorts, only requires about 15-20 minutes of your time per day. So if you have a full-time job or you're traveling or anything in between, it's very easy for you to manage without that much time. And reason number 3 why I absolutely love this strategy, it is a very high win rate. It's a very consistent strategy provided that you respect all of the strategy rules that I will outlay in this video. You are going to win most of all your trades, and for the ones that don't end up as pure winners out of the gate, well, you'll just get to acquire some of your favorite stocks at some very decent levels. So in today's video, we're going to be covering a few things together. Number 1, the expectations for the week. What do we have in terms of volatility catalysts? Talking about potential earnings releases and also talking about potential macroeconomic releases and other news events. We will also be briefly taking a look at the technicals for our setups on the SPY and QQQ, and in the event that we do get the infamous pullback that everybody seems to be waiting for, where are we possibly going to go and who is still in control? So we'll be doing that in section number 1. Section number 2 of this video, we will be doing a very brief recap of the strategy rules. I want all you guys to know these rules, memorize them, and internalize them. That way you'll have the best possible chance at a consistent win rate overall in all of your trades. So number 2 will be the strategy rules. And then of course, section number 3 of today's video, we'll be going over the top 5 options for the week. And as per usual, at the end of the video, I have 10 bonus plays for you as well. So make sure you stick around to the end. Without further ado, let's jump right into the action, shall we? So in terms of the expectations for the week, what do we have moving forward in terms of volatility catalysts? We're going to start off with this big one, which is going to be Monday throughout the day. We are going to have President Zelensky meeting with the Trump administration at the White House, but he will not be alone. He will be accompanied by several European Union leaders, namely German Chancellor Friedrich Merz, French President Emmanuel Macron, British Prime Minister Keir Starmer, Italian Prime Minister Giorgia Meloni, and Finnish President Alexander Stubb. Special noteworthy attendant as well will be Mark Rutte, the Secretary General of NATO. So that should be an interesting meeting. We will see whether or not there can be conversations built upon Trump's meeting with Putin just last Friday. And of course, any positive catalysts from this meeting will impact the markets in a positive way. There can't really be too much downside because as of right now, the downside is pretty much already priced in, right? The war would simply, unfortunately, just continue. So I'm expecting if there is any surprises, they would be positive surprises to the upside here. That's going to be very noteworthy. That's on day number 1 on the Monday session. Thereafter, we have some macro policy releases, but not many. On Tuesday, you can see here a very soft day, not much to see there. On the Wednesday, we get the Fed minutes, but that's just a recap of the meeting they had a few weeks ago. But thereafter, guys, we start the infamous Jackson Hole Symposium. Now, Jerome Powell crashed the markets during this symposium in 2023. Last year was kind of a dud, and I'm not expecting too many big things out of the Jackson Hole Symposium this year around. Not expecting Powell to comment on the direction of interest rates too much, and even the status of the economy. I largely think he will be saying the exact same things he has been saying for the better part of the last 4, 5, 6 months, which is just that the Fed is data dependent and they can afford to take their time before cutting interest rates to measure the balance of risks between the labor market and the risks of inflation as well. But we do also have S&P Global Manufacturing on the Thursday session. That is probably your biggest macro catalyst of the week. But of course, guys, this week, very light. No CPI, no PPI, no jobs reports, no nothing like that. So it'll just be a question of what Jerome Powell has to tell us overall. So overall, in terms of the macro, a very light week. Not too many very big data releases that can possibly throw some volatility into the markets. Now, in terms of earnings, also a fairly light week. Now, we have some interesting companies on the table, such as Palo Alto after the close on Monday. Tuesday, we get Home Depot as well. A few home builders as well, such as Toll Brothers. Wednesday, we get Target and a few other companies. The biggest day, arguably though, is going to be on the Thursday session where we get news from Walmart as to the health of the consumer. And if their earnings are anything like Amazon's were, I'm expecting pretty decent things from Walmart. But you guys must remember, in February, they did spook the market when they said that the tariff impacts were potentially negatively affecting consumer preferences and consumer choices. So we'll be curious to see, will Walmart once again bring down the markets, or will their earnings just be fine? That is probably going to be the biggest one of the week, but it is on the Thursday session. As a result, most of all your volatility catalysts are late on in the week, which means that early Monday or early Tuesday, when we love to go shopping for these put options, we can find some very decent opportunities on some drops, and thereafter maybe start to position out of the market as the week moves in to the Thursday session, where we obviously get the manufacturing report and then the Walmart earnings. Well, if we could be into some trades Monday and Tuesday, and if they come into decent profitability, wind them up by Wednesday afternoon or maybe even Thursday morning, that would be pretty good for us overall. And that is kind of the strategy that I will be utilizing this week as well. Now, in terms of the technicals, there's really nothing special to report here at all. The bulls are truly in control of this market, but we know, of course, and I've been saying it as well, that the fall seasonal period is a little bit soft. It's a little bit choppy. It's known as one of your more bearish seasonal patterns throughout the year. But so far, we are not seeing any of that bearishness. Keep in mind, guys, the markets don't just sell off for seasonality alone. They don't just say, oh, well, it's overvalued, so let's just drop the market. There needs to be a catalyst. There needs to be a spark of some sort that starts the selling pressure and then keeps people out of the market during this fall period. Until we get that spark, and we've had a couple of them that have almost done it, such as the non-farm payrolls report a few weeks back, such as the PPI report, which just happened the other day on Thursday, but nothing so far that is stuck long enough in the markets to really bring us down in a big way. Who knows if we get something this week, and I'd be surprised if it would come this week, but let's say we do, and we get the infamous drop that everybody's been looking for. I'll remind you who's in control. It is still your long-term bulls. We would just be looking for a daily higher low for possible further trend continuation, and in the event we cut too deep and we unwind this daily uptrend into a daily downtrend, just understand we are going for a weekly higher low for the bulls. They still have full control of the SPY, full control of the QQQs, and one thing that I want to bring your attention to, guys, is the broadening out of the market. Even if some of our favorite tech names and favorite semiconductor names take a bit of a slide, take a bit of a breather, do we have the rest of the market there to pick up the slack? The answer indeed is yes. Take a look at some of your breadth indicators, percentage of stocks above their 20-day EMA, only at 52%. There's a lot of room here for the market to broaden out. Percentage of stocks above their 50-day EMA, also relatively even at 56%, right? Relatively balanced here at 50%. So we do have some movement, which is possible to the upside. Not all of the market is in overbought conditions. So in the event some of your favorite growth stocks, some of the hype stocks, some of the retail fan favorites, some of your big tech names, and some of semiconductor names drop, well, there's a lot of components in the market that can kind of lessen the blow. Onto percentage of stocks above their 200-day moving average, same concept. Only 53% of all stocks are currently above their 200-day EMA. So we do have a lot of possible upside, possible broadening out of the market. So just be cognizant of that, right? If your favorite names do start falling off for XYZ reason, well, establish some very key support levels, establish some levels that you would want to go shopping for them. And as a result, you may just find some opportunities for writing some short puts on your favorite names into those very big support levels. That is pretty much your preview for the week. Hopefully you guys enjoyed that. Now, in terms of these strategy rules, so I used to go over these about 10 minutes per video. I've stopped doing that just to be more efficient on the time, but I will leave a link down below in the video description. It's about 10 minutes, guys, where I explain every single line of this strategy in its entirety. So make sure you check out the video down below in the description. I'll leave a link to it where I go over these rules. You really want to internalize these rules. As long as you're respecting all of the rules, you'll have the best possible chances at success. The one thing that I do bring up every single video, guys, is make sure you are focusing on high quality and high conviction companies, right? If I take a play on Elf Beauty, right? Some people like Elf Beauty, some people don't like Elf Beauty. Maybe Elf Beauty is high conviction for you, maybe it's not for other people. If you don't like it, then don't force yourself to trade it, guys. It's all about high quality and high conviction companies for you. Because if you get assigned any of these stocks, I'm not the one holding them. you are, and you want to have good conviction and good confidence in any positions that you do get assigned. The rest of the rules, as I said, further explanations down below in the video description. So with that out of the way, let's now move into the top 5 options plays of the week, and we're going to start off with a pretty fun one, which is going to be Micron. So Micron, again, having a bit of a drop into the end of the week, coming down after the Applied Materials earnings, and in the event we find a local double top right here and retrace to the downside, I will be looking to play Micron just as I did all the way back here. Micron has some really good fundamentals right now. In around the 110 area, you're talking about a forward price to earnings of only 14 and a very cheap PEG ratio and a very cheap price to sales. Micron is pretty much cheap no matter which metric you use to value it. That being said, the short-term bears are starting to make a little bit of a move, and the expected move for the week is around 116.25. If you guys don't know where to find the expected move, this is just what Wall Street thinks the price could drop to by the end of the Friday session. You can go to this website right here, barchart.com, type it into Google, bar chart, expected move, and then whatever stock you want to look at. Here you see I have new holdings pulled up, right? So you can go down here and look at the lower price, and you always want to write put options below that area to give yourselves the best chances of not being assigned. That being said, Micron, the expected move is 116.25, but we also know that the larger area of support is down here starting at about 110. So we have a lot of distance between us and this zone. However, if Micron and other semiconductors continue the slide that they started on the Friday session and Micron comes down into the expected move, this one has some good volatility, and you might be surprised at what you could find down here in the lower 112, 111, 110 region. So let me bring up the options chain and show you exactly what I'm looking for this week. Let's go shopping together, shall we? So let's pull up Micron and let's see, can we find anything at the lower 110s, or might we have to be a little bit more patient? Well, I'll be looking for the 0.5% rule, guys. 0.5% is our take-home ROI. How do you know that a strike is paying 0.5%? It's very easy. Divide the strike price by 2 in your head, and you're looking for that in cent increments on the bid price right here. So half of 115 is like what? 57, 58 cents type of thing. Let's just call it 60 cents. And as you can see, the 0.5% rule here is at 114. That's not too bad. That is below our expected move of 116, but still, 114 is not really near anything. I mean, sure, you can argue it's close to these guys right there, but the bigger area is really starting down here at about 111, 110. That being said, as of right now, there's nothing available below 114, but if Micron opens the day another 1 to 2% to the downside, well, you best believe that you probably will get some opportunities down here. 112, 111, 110. You should be looking for about 55, 60 cents on the bid. If I can find a trade on Micron come Monday or Tuesday morning with some early morning volatility, I definitely will be participating in this fantastic stock. That is trade number 1. Trade number 2 is another stock that you guys know very well, and that is going to be PayPal. So PayPal's come down quite a bit after their earnings, and lucky for us, it's coming into a very large area of support. Look at all this, guys. This is support for literally the last 2.5 years, a very strong area. We covered their earnings after they had them on the channel a few weeks ago, essentially, and we were noticing that at the low 70s, PayPal actually had a very decent valuation. The price to earnings on a forward basis was low, the PEG ratio was very good, the price to sales was very good, and the free cash flow yield was absolutely amazing. So I know that if I am bidding PayPal down here, even if I do get assigned, at least I'm getting assigned the stock at one of its cheaper valuations in recent history. Now that being said, we are very close to support, and as you can see, the bears made a bit of a move forward on Friday. In the event that move continues into Monday or Tuesday, we might be able to find some very nice opportunities into this very wide support range. The expected move for PayPal this week is 67.42. Let's go shopping on the options chain together to see what can we possibly find below 67, if anything. Let's move on here. So PayPal, we're looking for 0.5%. I'll remind you, half of 67 is about what? 33, 34 cents pretty much. So we should be looking for a strike that pays roughly that. And as you can see right here, 67, the strike right below the expected move, is only paying 31.32. So you must understand by now that what we need from PayPal is a little bit of a red day. I gave this exact same trade last week as well, and you can see on the Monday session, we had the drop. A lot of my Discord members were able to find the 65s. If we get a drop again early on this week, down into 68, or maybe even into 67 right away, Monday morning or Tuesday morning, we'll be looking for the exact same trades. My favorite strikes on PayPal for this week are 66, 65, and 64. Obviously, you want to be going as low as possible while still getting your 30, 35 cents. What does that mean? Well, we already looked at the 67s, right? If it gaps down 2% on Monday morning, do you really think I'm going to be sitting here at 67? No, I'll be going as low as possible. The premium will be moving down the options chain, and I'll try to get 66, 65, 64. Those are my preferred strikes on PayPal for this week into our support range. Stock number 3 is going to be Applied Materials. So Applied Materials had their earnings the other day, and they were down 14%, approaching daily oversold conditions and quickly approaching a very solid area of support. Talking about this whole 155 down to about 140 zone. Previous all-time highs from back here, previous resistance, previous support from the tariff fear lows, and the infamous 200 weekly EMA, where every time it's either touched or cut down, if it's breached, it's always been a very decent buying opportunity for Applied Materials. It can get a bit bumpy down there, but this is confluence, right? We have daily oversold conditions, a very wide support range, a long-standing moving average. As a result, we should not mind playing this area on this quite solid company. I covered their earnings in yesterday's video on the Saturday session, and we derived the fact that, yeah, Applied Materials was a bit expensive if you measure by the PEG ratio, but the forward price to earnings and the price to sales and the free cash yield is actually not that bad. It's definitely not overvalued. Is it extremely cheap? Not so much, but it is fairly priced, especially if we do make our way into the low 150s range. Couple that with the support, the EMA, and the daily oversold conditions. So that being said, the expected move for the week is 156.32. Let us go shopping for some Applied Materials options and see where can we get below that expected move. So let's pull it up real quick together. We will go take a look, and you will see quickly that if we're looking for the 0.5% rule, half of the roughly 155 range would be about what? 75-80 cents. So where is that paying right now? Well, we are seeing at the 155s, it's paying 97 cents. The one strike lower, 152, is paying about 60. So the 152s are not quite there yet, and the 155s are just a little bit rich, right? That is a 20 delta trade. However, if Applied Materials continues the momentum on Monday, that I would not be surprised if that is indeed the case. If they continue the momentum to the downside, well, what do you think is going to happen, right? Sure, the 155 strikes will have more premium on them, but maybe you can find 70, 75 cents on the 152s. My favorite strikes for this week for Applied Materials are going to be 152 and even 150, depending on the size of the move down on Monday morning. I want to be getting as deep as possible into this very nice support range below the market. So that is going to be the trade that I'm exploring on Applied Materials. Stock number 4 is going to be Google. So Google up here at $205, close to the all-time highs. And I know what you might be saying. Well, isn't Google support all the way down there? Matter of fact, indeed it is. The support range is 195 down to about 187, but Google has some pretty good volatility on it. Now, full disclaimer, the reason why Google has some volatility is because by the end of the month, nobody knows the exact date, but by the end of the month, the judge needs to give the final ruling as to what is going to happen to Google. Are they going to order the breakup of Google or order Google to divest Google Chrome? Well, the consensus right now is no, but there could be other remedies, such as Google having to share some data about browsing or search dynamics on its customers, which would allow other competitors to try and implement the same things that Google is doing to try and compete against the company. But as of right now, the divestitures of Google Chrome's lines of business or other lines of business from Google is kind of largely out of the question. But if that ruling does come out, and when it does come out, it could be quite volatile for Google's stock. That being said, I am a buyer of Google down here, 195 to 187, but you need to play it a bit carefully, and you do need to wait for a bit of a red day. The valuation on Google right now is extremely, extremely attractive, and I do think that everybody is waiting for this catalyst, and as a result, that is why Google has been so cheap roughly for the past couple of months. Although the bulls are in full control of the market right now, I do really want to play these pullbacks because the long-term bulls are in full control of this weekly time frame. We'd be looking for a weekly higher low. All of your moving averages are there. The previous support is there too, prior resistance. This is the logical fallback area for Google if ever they need to take a bit of a breather or if ever they get hit with some news. I'll be paying special attention if we get a red day on Monday or Tuesday. Try to get as deep as possible into this lower 190s. The expected move for the week is 198.27, but I figured I should show you guys these strikes anyways. Take a look at Google right now. You will quickly see that for the Friday session, where's the 0.5% rule, right? Half of what? 190,200 is roughly 95 cents to $1. You can see here that you're actually getting 96, 97 cents at the 195s. However, if Google starts off the week a bit red Monday or Tuesday, and we move more into the expected move, perhaps you can get even better. Think the 192.5s or the 190 strikes. As long as I'm into the support range, I really don't mind playing Google. But then again, I also do understand if you guys do just not want to play this at all until the judge gives his ruling. Once again, these top 5 options plays are just ideas. I'm telling you guys what I am possibly looking for. But if you would rather prefer to wait, that is completely up to you as well. That being said, that is stock number 4. And now stock number 5 is going to be New Holdings. So New Holdings had their earnings just last Thursday, and we did cover this one on the channel just yesterday when I went through their earnings recap, essentially. And we were saying that, for the most part, this company had a very decent valuation. Matter of fact, a lot of people could argue, and myself as well, the company is trading very cheap in relation to its revenue growth and EPS growth as well. One of the fastest growing fintech companies in all of Latin America right now, with over 123 million customers. That being said, they had fantastic earnings. However, the market started selling it off. If we get a continuation of that sell-off and a rejection of the resistance range now, 1374 to 13, well, we might just be able to get some very nice options down here. $12.50 down to $12. $12 has been an area that I've played several times on the channel with you guys as well. It is the next closest area of support. There's been a lot of congestion and consolidation multiple times in this area. The expected move for the week for New Holdings is 12.55. So let us go shopping. Can we do something at 12.50? Or maybe even can we do something at 12? Let's go have a look, shall we? So New Holdings, this is one maybe for the small account guys out there. Pay attention to this one because you might be surprised what you could get. So taking a look right now, we can see that the expected move is 12.55. Can we get below that? We can get barely below that, guys. 12.5s. These are paying 10 cents. That is almost 1%, right? About 0.75, 0.8% for the week, which is very good. Unfortunately, at the 12s, there is nothing. However, just pay attention. In the event that you get a further slide on the Monday or Tuesday session, and it brings New Holdings back down into the high 12s, 1290, 1280, 1270, with the volatility, you might be surprised. Maybe you can get the 12 strikes. I wouldn't mind playing it 2 different ways. Let's say that my total contract size on New Holdings can be 6 contracts. Maybe I will write 3 contracts at 12.5 to start off the day on Monday on a bit of a red day. I'll write 3 contracts here. And then if we further proceed to slide a little bit more throughout the week, maybe I do 3 remaining contracts at 12. That way I can get an average between the two of 12.25 minus the credits received, which would bring the average down a little bit more, closer into the $12 range. That is probably how I'm going to be looking to play New Holdings this week. And with that, that wraps up all of our top 5 options plays. Hopefully you guys enjoyed those. Now let's jump into the bonus plays. So for the bonus plays, I will structure them in 4 different categories. Number 1, some growth companies, 4 growth plays. Number 2, 2 value companies, because I know some of you guys prefer to play the value companies. I'll show you my thoughts on those. Number 3, some more small account plays for those of you that are working with a bit less capital. And then number 4, the large account plays. So stocks that have very high share prices. For those of you guys that want the higher quality companies and higher share prices, we'll explore 2 plays there as well. So let's get into the bonus plays. And just a quick reminder is that I won't be giving you guys the expected moves. You guys are now professionals at finding those on your own, but what I will give you is the names and the levels at which I'm looking to play them. So part 1, as part of the growth stocks, we're going to be looking at SOXL, 3 times leveraged semiconductor play. So after the Friday sell-off, we know that SOXL has been coming down into our infamous area of prior resistance, which should be now support. So that being said, this is based off the SOX. And I just want you guys to understand where the SOX is trading right now. We are above this massive area of support. So any pullbacks, I do believe, are great buying opportunities, but we can play them with some good distance. If you ask me where I want to play SOXL, I'll be looking at 23.5, 23, 22. So 23 down about $22, $21, as low as possible to try and get the best possible price in the event that I am assigned. Growth stock number 2 is going to be BITX. So we know that Bitcoin has been pulling back slightly, not so much, but slightly. This weekend, it hasn't really done much of anything, but we know that on the Thursday and Friday session, those are pretty red days. In the event we get a further pullback, I'll be looking to play, well, the good old former all-time highs for Bitcoin, talking about 110 down to 108, clear areas right there. See it better on this chart. I did a better job of layering it out, right? So this whole lower 110, call it 108 down to about 100 area, and you'd be be surprised on BITX the distance that you can get. On BITX, that same area is represented by 55 down to 51. I'll be looking for the lower 50 strikes if I want to play Bitcoin. And if you're a fan of playing Bitcoin, you might consider doing the same. But just keep in mind, it's 2 times leverage, so just don't go too close and don't be too greedy. Number 3 is going to be HIMS. So HIMS has been suffering a lot since their earnings, right? The stock is down a tremendous amount, still not daily oversold, however, and even on the short-term time frames, we're just barely clipping into oversold territory. Now, unfortunately for HIMS, guys, we don't really have much support. We have the bottom end right here of the 40 region. It's the 200-day EMA, but you can clearly see that the larger support ranges start in the high 30s, 36, 37, 38. You can just widen this box a little bit to just encompass those guys. But for all intents and purposes, it is the high 30s. The good thing with HIMS, though, it has a tremendous amount of implied volatility, and as a result, we do not need to play it too close. Take a look right here. If I go to next week's options, you can see that, as a matter of fact, for August 22nd, I can get those lower strikes. Look, I can get all the way down into 41.5. If HIMS declines more this week, I've been playing this one for the past couple of weeks with some good distance. If we start off the week with another red day on Monday or Tuesday on HIMS, and it pulls us down into the mid 40s, well, maybe that's going to unlock the low, or rather the high 30s, right? I've been playing 40 strikes. I've been playing 38 strikes for a better part of the last 2 weeks, every time we start off the week red, and so far, so good. So this week as well, I'll be looking for under 40. I really like under 40. 40 down to 38. I would not mind playing a little bit of HIMS. And now the last stock on this list for growth names is going to be CoreWeave. Now this one, you have to play it a little bit differently. This one is all about distance. We're playing the momentum. We are playing the volatility. As you can clearly see, there is no support here at all. We're actually flushing below the last line of defense right there. But what we can do is play it with a good amount of distance. Only play this one if you do not mind being assigned the stock at the strike price that you are playing. That being said, we do not need to play CoreWeave too close. I know that a lot of people get seduced by very high premiums close to the money. Take a look right down here in the 90s. You'll see, wow, I can get $2. Yeah, don't get trapped, guys, right? Don't get seduced by high premiums ever. The way that you can play this one is playing it super far away from the current stock price. As you can see right here, the $80 strike is currently paying 50 cents. If you can find a 0.5% rule, even at 75, talking about like 35 cents, 40 cents between these two strikes, that will be a lot of distance for CoreWeave to cover in one single week by Friday. That will be from here all the way down there, talking about another 20 to roughly 25% to 80 and 75. But once again, this is a momentum and a volatility play. You need to wait for a big red day and then sell even further below, creating the maximum amount of distance so that you don't get assigned, or at least if you do get assigned, at least you know you're getting probably a very good price, and you will probably be getting very oversold short-term conditions on the 4-hour and maybe even the 1-hour timeframes as well. So if you are playing this one, keep in mind what I say. Play it with a lot of distance. Now, 2 value stocks that we can look at for that type of investor are some of the banks. So some of the banks have been pulling back. Wells Fargo Corporation, I like this one a lot, between $75 and $72. It's coming down into the 200-day moving average and is a very decent area of prior support for the markets. You can see that this one essentially is just consolidating, even on the monthly time frame, right? This is kind of where all the monthly candles have stopped their activity, right? In roughly the whole $75 down to $70 range. So I really would not mind playing Wells Fargo on a back test here. The monthly bulls are in control, looking for a back test higher low and probably the run. So I don't mind doing this on Wells Fargo, but I also don't mind doing it on Bank of America. Same concept, guys. A nice breakout, a back test of a long-standing area of support. This was prior resistance and support from prior highs back here. Did it again, unwound by the tariffs, but now this area should be holding without any crazy volatility in financials. In the event Bank of America continues the slight slide into Monday or Tuesday, if I can find some like 45 strikes down here, 45, 44, I would not mind playing Bank of America. Those are the 2 value names that I might be going shopping for. Now, for some plays for some small accounts, well, we might contemplate something like a SentinelOne. So SentinelOne has sold off with the better part of the rest of the cybersecurity industry. You might have noticed that recently cybersecurity has been down and down a lot. CrowdStrike has come down roughly 17% from the highs. Palo Alto Networks has come down a tremendous amount from the highs. 15, but was down as much as 20%, and other names have kind of suffered the same fate. One name that's very small and a company that is improving profitability while still scaling revenue is SentinelOne. This is actually quite a decent acquisition target. I'm surprised that none of the bigger players have actually tried to acquire them so far with a takeover bid. That being said, this area that we're coming into, guys, this is 2 years of support. All the big volatility events in the market so far have stopped the price in this location, and right now the bulls are trying to play a little bit of defense as well. We just came out of oversold conditions, which lets you know there are some big buyers still sitting down here, and SentinelOne is very cheap. The volatility is pretty good, so if I'm playing this one, guys, you know, 16 on a $14 range, I really would not mind. As long as you're not going too heavy on the size of the contracts, we should be able to do this one just fine. You might remember that I am even assigned this one at 17.5, and I even would not mind DCAing this trade 15, 14.50, things of that nature. Just an idea for you guys if you have smaller accounts out there. And the other one for small accounts is Oscar Health. Very clear area of support on Oscar Health, guys. Talking about 15 down to about 12.50. It's been an area of support that has stood the test of time for the bulls for a better part of the last year and a half. And this one is in the ever so controversial healthcare insurance niche. And we all know that last week Warren Buffett started a position in UNH. So a lot of these companies have been getting a positive bid, whether it's UNH, whether it's companies like CNC's also been catching a bid. Companies like Elevance have also been catching a little bit of a bid off the bottoms here. Companies like Humana as well. That whole sector, guys, in the past few days, past few weeks, has been kind of rounding the corner. So the whole time that Oscar Health is still down below here, I do not mind playing it. It's a smaller market cap one. It is a retail fan favorite as well, but I won't be going too heavy, but this is still fairly interesting to play. I've been playing it every single week for the past 3-4 weeks, and I probably will play it again in the event that we end up with some form of a red day on Monday or Tuesday. I'll be looking to bid probably into the 14s, 13s, as low as I can possibly get. Those are 2 plays for small accounts. And now for you guys out there with the big accounts, well, number one, we got to talk about American Express. Very solid company. One of my favorite companies for that matter. And now we have a beautiful area of support talking about roughly 295 down to about 285. This whole range that has stopped a lot of monthly candles dead in their tracks. Obviously, we had the tariff sell-off, but this is the 12 EMA, guys. And normally in the context of a bull market, well, the XP bulls have a good chance, other than a global pandemic, of course, at a big bear market of 2022, we can see that riding the 12 EMA on the monthly is not that bad of an idea to throw some contracts in the mix, especially since their earnings were fantastic. And even at 305, guys, the valuation of this company is still very good. Fantastic free cash flow yield and also fantastic forward price to earnings and PEG ratios. As a result, if American Express shows a little bit of weakness and I can find some contracts 295 down to 285, I definitely will be doing it in the next few days, reloading this one again. I played this one quite frequently when it came down there, and I will be playing it again. And the other company is another credit card company. This time it is Visa. Visa, super strong earnings. However, this one also has been consolidating in this region, talking about roughly 340 down to roughly 325. This whole region for a better part of the last, 6 months, 7 months worth of support. So in the event that Visa, although they have been coming up higher here, in the event we retest this area, because now the bulls put in a very nice rally, in the event we retest down here, 340 to 335, I think this one is a very solid play. If you have a big account, you can even do this one for multiple weeks. If it comes down here, no need to only play it with 1 week. Look at the premiums for 2, 3, 4 weeks. If you do that, just make sure you're getting 0.5% per week. So if you're looking for 4 weeks, you'd be looking for 2% for the month for possibly the 340, or depending how low we go, maybe the 335 strikes as well throughout this week's session. So that is pretty much all of the plays that I had for you guys today. Hopefully you're able to be inspired by some or maybe all of them, and hopefully it also helps you along your trading journey as to how to identify plays and how to position into some of these plays as well. If you guys enjoyed today's video, consider dropping a like. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every Sunday before the market opens on Monday, of course, just to prepare for the week and give ourselves as many trade ideas as possible to prep and plan. And last but not least, if you have any questions on the strategy, I'm always there to help you guys out. Please leave them down below in the comment section, and I will gladly get back to you tonight before the markets open this week to give you guys the best possible chances at executing properly. Last but not least, if you guys were interested in joining a trading and investing community where we do this strategy almost full time every single day in the markets, and we specialize in this strategy. And you are also going to be trading along myself personally. You may consider joining our Discord community. The link is down below in the video description. In that community, you get access to all of my personal trades in real time. All of the wheel trades as we go over, but also a lot of the other option strategies that I do in the trading accounts as well. Whether those are leap call options, call debit spreads, credit spread strategies, and even swing trades with shares. Well, you get access to all of them. Here's just a lot of our trades in the past few months. Pay special attention. If you like the wheel, just pay attention to the wheel strategy, right? Just look at the number of wins versus losses. The wins are green check marks. The losses are the little red circles, of course. The wheel strategy, one of the more consistent strategies in the Discord. Of course, I can't really promise anything, but I mean, if I just show you guys the past history, you guys can come to your own conclusions, right? So you get access to all those trades as soon as I do them. You also get access to our private morning live streams where I trade live in the morning for about 2-3 hours at the open from 9:30 to about noontime. I trade live, but I also take all your questions on your stocks, your options, and your long-term portfolios. So make sure you attend those live streams. If you can't be there, they are always recorded. And you can also ask me all your questions in our chat rooms all throughout the day, and I'm very fast to answer. You also get access to our private video section where I go over even more strategies than this one. I even give one wheel strategy that I never show on YouTube, which is the large account wheel strategy, which a lot of our members who do have large accounts, they love that strategy. But I also have a whole other educational content section, which is technical analysis, fundamental analysis, other options, trading strategies, and many other different videos in between. So you get access to those, and you also get access to all of my watch lists that I use to prepare the markets every day and trade this strategy specifically, and access to all the charts. You can literally just copy paste my charts. Whenever you see these charts with support and resistance boxes on them, you can just copy paste all my charts. It takes like 10 seconds. You get all the support, the resistance boxes on hundreds of charts. And whenever you guys see fundamental analysis on the videos such as this from earnings on hundreds of different companies, you get to copy paste all that, all my watch lists. It's just an extra added benefit for our Discord members. If you would like to benefit from any of that, the link, of course, as I said, is down below in the video description. Hopefully, I see some of you guys in there soon with us. And if not, I will see you here right back on the channel. Take care. That's it for me. Have a great rest of your Sunday evening. And as usual, hopefully you guys have a beautiful week in the market. Keep crushing your trades. See you guys soon. Take care and peace.